Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner. Now here is your host of Money Nation, Ed Gardner.
Welcome to Money Nation. Today's special guest, my sidekick, Joe Cunningham. Joe, how are you?
I'm doing great, Ed. Thanks for having me on again. Appreciate it.
How's the weather in Minneapolis doing today?
It's a typical day in January. It's going to warm up a little bit today, but tomorrow will be minus 14. So I've got that to look forward to.
Well, Joe, it's getting a little cold down here in Vero Beach. I mean, it's been 70 to 80 the last couple of weeks, and we actually are down to the 60s. So we're feeling the same pain you have up there, Joe.
And I'm moving in. Okay, be careful there.
When you coming? Hey, the big news here today in the market is Microsoft buying Call of Duty maker Activision Blizzard for $68 billion. What do you think about this? You know, gaming is huge. What do you think about Microsoft getting into this?
Well, I wonder if it will take the cool out of some of Activision's properties. You know what I mean? Microsoft is probably the second most hated company on the planet. Sure, they've done well. The stock's done great, but I put Facebook is the most hated company on the planet, and Microsoft is a big behemoth. But they're consolidating their position in this space, in the gaming space, and it ultimately, these games will no longer be for free to play, right? I mean, there's going to be some subscription type of model, and it's just incremental, but it's coming. That's a big price, and it makes me wonder on the valuation for Epic Games, which is a scheduled IPO for sometime this year, 2022, and that Epic Games is Fortnite, which is the game of choice in the Cunningham household amongst the 16-year-old trolls that come and go here playing games. So
yeah, your son's a big gamer. Now,
yeah, they all are at this age.
Although some kids play more than others, some kids play a little. Some kids are in their rooms all the time. I've seen that with some of my friends' kids. Now, I said Microsoft getting into this. Obviously, they already own Xbox. They're the maker of Xbox. Yeah. So they're with this buying Activision. I think they then become the third largest gaming company by revenue.
Right. I imagine Sony's on top of that, but they're. You
got Take-Two Interactive, too. Take-Two Interactive is a pretty big company, I believe.
Take-Two, that's the other one, right? And I think Tenet is another one. But, look, it's a typical oligopoly-type model where, we're starting to see consolidation at the top where there's two or three different incumbent players. And, Microsoft is Microsoft. They've got the biggest bank account in the business. So, they're going to win this if that's the path they want to go. But I do wonder about the cool effect with Microsoft owning all these properties, and if Candy Crush is going to be as cool for the boomers to play as it maybe once was.
My mother told me, actually, my 82-year-old mother told me yesterday that she plays Candy Crush. I never knew. So, you think gaming's for the young kids. You got 82-year-old ladies playing Candy Crush before they go to bed. I thought that was pretty funny.
That is great.
The Microsoft CEO, he quoted, "Gaming is the most dynamic and exciting category in entertainment across all platforms today and will play a key role in the development of the metaverse platform." So, we think of games as just games, two people playing against each other, but there are these other games out there where you build worlds or you build civilizations, or where people buy things. They put money in to buy a house. They have to pay a couple dollars more to buy a car in the game. Well, that's kind of like this whole NFT and metaverse thing is. The kind of big games in a way. Obviously that's these metaverse platforms are. People think they've got a lot of potential. They're very hard to understand for a lot of people. What do you think about the whole NFTs and the metaverse? That's the hot thing going on right now.
Well, think about this. When was the first time you heard the word metaverse? Right?
Not too long ago.
Not too long ago, right? And all of a sudden it is a thing. And it is not just a thing; it is the next big thing. And it's all part of the the Web 3.0, right? Which was supposed to be a decentralization of web platforms, where you and I would have our own platform essentially and own our data. And that's a little bit what you saw with Jack Dorsey when he resigned from Twitter and he went out and he's trying to advocate for the democratization of the internet, of the next iteration of the internet. And what he's done, and I'm not a Jack Dorsey fan, I don't really care about him at all, but what he has done is he's betrayed his Silicon Valley class, right? And that's kind of a big deal. So we'll have to keep an eye on that. But yeah, metaverse, I mean, the first time I heard the word was probably 6 months ago. And now we're living in it, apparently. And if we're not living in it, we're missing out on it. But the NFT market, I have gotten into a little bit, just in terms, and the Bitcoin, of course, we know, just in terms of trying to understand a little bit better, because I had a friend that made an awful lot of money on a trade of a monkey.
Yeah,
a picture
of a monkey,
right? And so I went on to OpenSea and I started looking around there, and still not quite there. But what I did come to understand.
By the way, Joe, OpenSea, for the listeners, that's where people buy and sell NFTs, right?
That's right. That's exactly right. That's the biggest platform doing it now, but you'll have others that will follow. But OpenSea has some monikers of liquidity and legitimacy, and that's that's key here. When I got into the market, though, for NFTs, this is interesting, Ed, is that the 80% of the NFTs that are out there are owned by just 9% of the participants in the market. So it's very highly concentrated at the top, and these guys are keeping the money in it for themselves very much. Now, you can follow the trend pricing, the directional trend pricing on these things. There is a market. You can follow it. It's fairly dynamic if you want to be part of that 9% or maybe make that 10%. But we're going to need, and this goes back to the decentralization theme, we're going to need to see a broader market for this to actually become a real market, right? You can't have any market that is controlled by just 9% of the participants. Really isn't a market. Even if we went back to the old 80-20 paradigm, right? That would be better than where we're at right now. So, but as it relates to the NFTs, Bitcoin. So when I was doing this, I was looking at it, going like, what? Trying to understand OpenSea and the whole thing. Bitcoin is actually controlled. 95% of Bitcoin trades are controlled by 2% of accounts.
Wow.
I'll say that again. 95% of Bitcoin trades are controlled by 2% of the accounts. So that's even worse. Bitcoin, I don't follow it every day, but I think it's a 43,000 or something for a coin. So I know the market's about 800 billion. And I try to put Bitcoin relative to gold. Right. And so gold right now is about a $9 trillion market cap if you took all the gold. And we know where all the gold that's ever mined in the world is. Right. We know the value, right? World Gold Council does it, who I used to advise, does an excellent job on that. So Bitcoin at 800 billion, in my model, I always thought that Bitcoin should probably be about 10% of the gold market. Well, that's about 800 billion. Yeah. So it's got a little bit of wiggle room there, but it's not going to work as a medium of exchange if the accounts are controlled by those 2% could be propping the price up or pushing the price up and down how they want it if they control it, and that's kind of scary. That's pretty scary. It is, and the mining aspect of this is also very highly concentrated, costs a lot of money. I had been asked to advise on a company in Minnesota that is doing mining, and they were putting them out in trailers in cold areas. It was a little esoteric for me. We ended up not participating in that particular opportunity, but it was an eye-opener in terms of how these guys go about that. You saw in Ukraine last week when Russia whacked them with a little internet outage and some cryptic messaging, how the mining shut down. And that was impactful on the market. So It's a funny class of assets, and I would just caution your listeners to do the research before they get into it.
Doesn't China ban it? It's banned in China.
I think the mining is banned.
Mining is.
Yeah, in crypto, I couldn't imagine a better class of people than the Chinese to be sitting and mining, most anything. But so China is an interesting one. They got the Olympics coming up, and it's worth watching how they respond to this. They got the zero COVID policies, no spectators at the Olympics. Their fourth quarter numbers came in on the low side, kind of 4%. They'll probably grow 4 or 5% this year. So you have to wonder if what's happening in China will exacerbate the inflation expectations in the United States. It is the manufacturing hub of the world still struggles to with COVID and struggles to keep its factories churning out iPhones and everything else, which would only be exacerbated by the shipping issues that we've experienced, supply side issues that we've experienced in the last 12 months or so. So we're still very much keeping an eye on interest rates, Ed, and watching the market. The 2 to 10 yield has narrowed quite a bit, so the curve is flattening. My favorite harbinger of future inflation is still at under 3% at 2.77, but the headline figures are fat. And that headline figure is what's going to drive expectations, and expectations are going to drive people to make decisions that they might not normally make, and it could very well be driving what the Fed does.
Right. Hey,
so
Joe, hold that thought, Joe.
Yeah,
we're going to take a quick break here, and then we're going to be right back with Money Nation. Thank you.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter & Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only in as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter & Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back to Money Nation. So, Joe, the big question, Joe, is the NFTs real or not?
That is the big question, and I'm struggling with it. And I have to say, it does look a little bit bubble-ish to me. I mean, it looks a little crazy. I don't think they're going to go away, but I would spell crash with capital letters across the way. I just don't see how a market can be supported by that thin of a population. It's not a market. It's a trading club.
Yeah.
It's you know what I mean? It just has to. I'm really skeptical of these things, and we're exploring it. We're trying to do the research, trying to understand it. We're talking to people that are in it. I've got a friend that's launching 2 coins later this week, two crypto coins, and I was asked to be a CEO of another one. So it's I should know more than I do if they're asking me to be a CEO.
There is some news out here today also about Walmart. It says Walverse is a new trademark that's come out, and they're suggesting Walmart is planning to embrace Web3, including developing its own cryptocurrency, NFTs, or its own Walmart-verse. So you see big companies doing that. It kind of got to open your eyes a little bit and just see, is it real or not? It's a big question. It seems real, but it could be a bubble too. It's hard to tell.
If you're a Walmart, how do you want to wedge your way into the market, right? So you've got a universe of people that visit Walmart stores. We've all been there. We all know the experience of shopping at Walmart. And you've got another universe of people that are probably like the prices of Walmart, but don't necessarily go to the stores, right?
Right.
So Walmart would wedge into this market when the market craps out, right? When there's a significant opportunity for them to displace the incumbents, then Walmart would show up with an all-encompassing offering of cash, trips and prizes, really, right?
Yeah.
I mean, you're going to be able to do your shopping, have your cash, do your banking. They're an intermediary for financial transactions worldwide. I've been to Walmarts in China, and I've been to them, in other overseas markets, and it's just they're different, but they're the same. It's a fun experience to go to a Walmart overseas, actually. So when there's some dislocation in the market, you could expect to see, a large player like Walmart try to wedge their way in.
Yeah, they can't just sit there and do nothing, I guess, right? And the question again, is it real or not? Well, if you ask Sam Bankman-Fried, if you know who he is the largest crypto guy out there. He's the youngest billionaire in the world. I think he's worth 27 or 28 billion. So we'd have to say it's pretty real for Sam Bankman-Fried. I mean, this 29-year-old has made a lot of money, to say the least. So we'll have to see what happens. We'll keep in touch with this, and we'll see how it pans out in the future.
If you had 28 billion in crypto, right? How much of that are you going to leak out into treasuries and to put into the stock market, into U.S. dollar-denominated assets, yen-denominated assets, euro? This guy has got the wedge for sure, but I guarantee you that guy's diversified a portion of his holdings into fiat monies and real hard assets.
Right.
It would just be it would just make sense. So I did want to just talk about two things, if I may.
And by the way, we've got a call in here. Doyle, are you on the line? Oh, we've got a drop call on Doyle. Okay, Joe, continue on, please.
Yeah, no, this I thought was fascinating. So we talked about rents and inflation before, and how rents are going up like 18%. They're just going through the moon, and that is not reflected in the CPI, and it's not reflected really in any in any other numbers other than the Chase shilling. You got to follow that. So their rents are soaring. That's going to housing's a huge component of everybody's life, so that's going to compound the interest rate or the inflation question. But when I was looking into it a little further, I came across the stat that 46% of 18 to 29-year-olds are currently living with their parents. 46%. It's the highest level since 1948. If you remember, we had a war. We were kind of recovering from that. We had bad recession after the war. The lowest came in 1960, and in the 60s, 70s, and 80s, they were kind of pretty consistent. But 46% just means that people can't afford to move out. So this wage inflation thing is real for sure, because people aren't going to live in their mother's basements any longer. At some point they're gonna need to get paid, and that will become a theme this year for sure. But I just thought it was fascinating that number had matriculated up to such a high percent. And these kids are qualified, and I know older people will be grumpy about it, but the reality is they're the highest educated generation ever. They've got the means to, they've got the intellectual capabilities and the technology to go out and make a living. They're just not getting paid for it, and being forced into artificial markets.
Basically, they're home because rents are very expensive, and real estate rates are low, but prices of houses have gone through the roof. For those two reasons, people are going back home and crashing in the guest bedroom or in the basement.
Yeah, you bet. I mean, I read that, and I was grateful that my daughter has her own apartment and a job that pays her. Okay, good job, honey.
Exactly.
So that's worth watching. The other thing, Ed, as it relates to your particular profession as a money manager, I think 2022, we're really wondering if fundamentals are going to catch up with valuations. Are they finally going to come and sync with one another? Now, we're pretty bullish on stocks this year, I have to admit, but it's still the too much money chasing too few stocks scenario, and the overseas investments coming in. Interest rates are going to go up, so the bond market's going to, that money will shift from stocks to bonds at some point as the yield increases. That will help the dollar, which has also been stabilizing, and it's not trending upwards. But this is I think, going to be a good year for stock pickers like yourself, and I think you guys are going to do real well getting in there and doing the type of research that you do, making the adjustments in your client portfolios as you do. So we're really bullish on how things go. On the flip side of that is how they don't go, and you could see some real crushing revaluations of stocks. Some of the technologies, the FANGs, we've seen those move around quite a bit. They've got a lot of true believers that need to keep it up, though. I never believed Facebook's valuation because I always felt that the portfolios get locked in at a price and they got to support it. But even the Teslas of the world and some of those that really had a terrific run next year. I mean, you could see a significant revaluation or reassessment on some of those stocks that would be impactful on your clients.
What do you think about the oil? Oil's at $88 a barrel. It's the highest 7 years, 8 years. You like the energy sector?
Oil is probably going to go to 100. Right now, on the supply side, Russia's had a hard time keeping up even with its OPEC quotas. So, some of the Middle Eastern commodity exporting countries are probably a good play in the ETF market country-wise. So they're struggling. I did look at, what was it? It was U.S. What did I look at? I looked at U.S. wells under production, and we're down. So we're from 2 years ago, we're down, a million or so barrels of oil a day. Okay, so that's real oil.
Well,
let's call it about 10%. So we're probably going to see some continued upward movement in oil prices. So what does all that mean, right? Okay, so what's driving the Fed to make their interest rates? Is it a consumer? Is it real price inflation, like the old monetary inflation? Is it supply-driven inflation, or is it expectations of the consumer, right? And expectations of the professional trading market, right? So at this point, I expect the Fed will be raising, 2, 3, maybe even 4 times this year, but I expect them to be behind the curve and probably will still experience negative real rates in terms of inflation adjustment, right? So I don't see the Fed I see the Fed being talked about a lot, but less impactful on valuations than many seem to think if you turn on Bloomberg or, read Reuters. So you get kind of done with the Fed, to be honest with you.
Yeah.
Kind of stories kind of run its course, I think. But so it's really is the tail wagging the dog or the dog wagging the tail.
Yeah, we got some other price increases by a couple big companies announced today. Yeah, you got Peloton, the exercise bike maker. They're going to additional fees, $350 for the treadmill and $250 for the bike. It's like a delivery setup fee they're charging extra. Netflix announced they're going to be raising some prices by a couple bucks. So you do have prices going up still. What do you think about the 2-year and the 10-year? Aren't they getting pretty close? It's not quite an inverted yield curve, but what do you feel about that?
Well, they are. We're certainly seeing a flattening in the yield curve. But let me just address one thing with Peloton. I think Peloton is quite desperate to be acquired, possibly by Apple, maybe somebody else. So, it'll be interesting to see how the price action is on the stock. To be sure, my health club now, which is I got a nice health club, and it's pretty crowded all the time. People aren't staying home. They're kind of sick of the coronavirus thing, right? The virus is always a wild card out there. We haven't talked about it because it's kind of done.
That's for sure.
It's out there, but my health club is crowded, and I think people are probably some of that is they're trying to support their top line while their margins are probably under some pressure, and there's probably going to be some layoffs there and some other things. And,
you got to. You got to believe that. You got to believe increasing the price is not going to help them necessarily to expand market share, though.
No, it's not. Not at all. I mean, it's already expensive. I mean, who's buying their treadmills? And they've been mocked on television commercials for Progressive, and they're mocked in what was it that movie, the Sex and the City movie, and so they're becoming just not cool.
Yeah, exactly. They were cool 2 years ago. Now they're not so cool.
Just not so cool.
Yeah.
So I don't know. We'll have to keep an eye on that though. But again, so just to circle back to the treasuries, flattening of the curve is never really a good thing, especially when they're in an inflationary market. You want to see a steepening of the curve. So we'll keep an eye on the 2 to 10 spread. 2 to 30 doesn't matter like it used to, but because we only talk about it because the U.S. is one of the few countries that actually has a 30-year bond.
Yeah.
So why not? But
Joe,
yeah.
Thanks for being with us today. We're nearing the end here. Have a great week. We'll talk to you soon. And any parting thoughts at all?
No, my parting thoughts is I'm coming down to live with Ed Gardner in Vero Beach, Florida.
Can't wait to have you here. Beautiful place to live. Love it down here.
Excellent. Good.
Joe, thanks
Ed.
Thanks for being with us. Remember, listeners, any questions at all about your portfolio, you can always feel free to give me a call at 518-255-8854 or Ed Gardner at cutterco.com. You can always listen to old interviews. You go to YouTube and search Money Nation.